Namaste, good morning. Friends, we are walking into the next chapter of our income head. We divided income into 5 heads. Okay, salaries, house property, PGBP, capital gains, and other sources. We completed salaries as a discussion. I'm yet to post the assignment for salaries. I will post it today. I want to post it after your mock examination, but yesterday I was little bit tired. Today I will post it so that you can do the assignment. Okay, I am walking into the next chapter, income from house property, section 22 to 27. Income from house property, section 22 to 27. Income from house property, section 22 to 27. Section 22, basis of charge. Section 22, basis of charge. Annual value of a property consisting of land and building, opportunent thereto, of which the assessee is the owner, shall be chargeable to tax under this chapter after providing for exemption under section, after providing for deduction under section 24. Annual value of a property consisting of land and building opportunent thereto, of which the assessee is the owner, shall be chargeable to tax under this chapter after providing for deduction under section 24. Repeating the explanation, annual value of a property consisting of land and building opportunent thereto, of which assessee is the owner, shall be chargeable to tax under this chapter after providing for deduction under section 24. This is the basis of charge. Okay. We will break down this definition into smaller parts and understand the definition. Okay. The term annual value is the key factor here. I will come to that term little later. Some 30-40 minutes later, I will come to that term. Please keep it there. Annual value of a property. What is property? What is meant by property, friends? What is property? Anybody? What, Aishwarya Shankar? What is property?
Asset along with ownership.
Asset along with ownership. I take that answer. I take that answer. So that leads us to what is asset. Enna Naman, what is property?
Sir,
What is property?
the land or building which a person owns,
Is only the property?
mm, not actually.
Yeah. Yeah. Actually, for the question, what is property? The answer is a reverse question. What is not a property? Friends, everything is a property. Everything. Your notebook is your property. Your pen is your property. Your kit, your scale, your book. From here, as our friend Naman was saying, till land and building, everything. If the for the question, what is property? The answer is very big. But look at the law first opens up saying annual value of a property, and then closes the definition coming and saying what type of property we are talking about, consisting of land and building opportunity. I'm not talking about the other types of property in this chapter. I am only talking about land and building opportunity. Opportunity, okay, means together. Opportunity means together for classifying an income under this chapter. Land and building should be together. Should be together. For entry gate of this chapter is land and building should be together. This leads to one of the vital definition: letting out of vacant land will not fall under this chapter. To come into this chapter, my dear friends, to come into this chapter, it should be land and building together. To walk into this chapter or to classify an income in this chapter, what should be there is land and building should be together. Mere vacant land will not enter this chapter. Letting out of vacant land will not fall under this chapter, my dear friends. Letting out of vacant land will not fall under, I'm not saying it is not at all taxable. It is not taxable under this chapter. Letting out of vacant land will not fall under this chapter. Deepak,
Sir,
what is the chapter heading, Deepak?
income from house property, sir.
Okay, thanks, Deepak. The guest in the classroom wants to know what is house.
The place where we stay,
Where we na?
humans,
Humans na? எந்த human எங்க stay பண்ணாலும் house ஆ?
uh,
ஸ்டேனா என்ன?
தங்குறது சார். லிவ்.
லிவ்னா என்ன? பிரீத்திங்கா?
சார்
ரோட்ல கூட தான் பிரீத் பண்றோம், ஆபீஸ்ல கூட தான் நிறைய பேர் பிரீத் பண்றாங்க.
வேர் வி ஸ்டே, ஈட், ஸ்லீப்.
ரொம்ப ஜெனரிக் டேர்மா இருக்கு. ஐ எம் வெரி ஹாப்பி தட் யூ ஆர் ஸ்டேயிங் பீஸ்ஃபுல்லி அட் ஹோம். ஓகே, பட் ஜெனரலி என்ன ராம்குமார், நீ தான் இதுக்கெல்லாம் கரெக்டான ஆளு. வாட் இஸ் ஹவுஸ்?
சார்
நான் தான்.
சார் எதை சொன்னாலும் அதுவும் என்னன்னு கேக்குறீங்களே சார்.
So,
Living inside the four walls.
Yeah, okay. When you are coming to classroom, you are inside four walls. In an office, we are inside four walls. In a cinema theater, we are inside four walls. What, Aditi? What is house?
The place where we live.
That's what he said. I want to just understand what is meant by living.
So where we like permanently stay.
So keeping on shifting is not house.
It's an appearance.
Any other answer? What, Ovia? What is house?
Sir, the place where we use only for residing, like
Residing
we don't do
182
business.
days or more, Ada.
இல்ல சார், பெர்மனண்டா அங்கேயே தங்கறது சார். பிசினஸ்லாம் எதுவும் பண்ணாம அந்த மாதிரி இருக்கு.
So what happens
sir,
is
can I try one? Can I try one more time?
Yeah, sure, Raja.
A place for which we either pay rent or we own or staying.
Yeah, okay. Good try. Okay, right. Ritanya, in Erode, what is house? So that's the problem, That's the problem. Okay, and be sure that I will not be. I will only elevate the friends, or you're all my friend. Okay, and now I elevate your status to say that even Supreme Court is unable to define what is house. Even Supreme Court is unable to define the terminology house. Once they said, after all big research, etc., they said that anything with a kitchen is house. Anything with a kitchen is house. So hotels became houses. Office will have canteens, which became houses. So they have to necessarily withdraw that. We will take the first explanation given by our friend Ram Kumar with a small change. Finally, we have now concluded. He said four walls. Okay. Finally, we have just concluded, not even four walls. Any structure covered by a roof is known as house. Any structure covered by a roof, because we all know without support, roof will not stand. So they're not even worried about the four walls. Any structure covered by a roof is known as house. Why I am taking this time is, though the chapter heading is house property, even if the property is let out for commercial purpose, like office, godown, okay, office, godown, shop, etc. Still the rent received is taxable under this chapter. Friends, even though the chapter heading is house property, I am unable to define house. So what happened? If you are receiving rent for a building, it became taxable for this purpose, even though I have let out the property commercially or for commercial purposes. For example, Bharatwaj Institute pays rent to the landlord, where we only conduct classrooms. But for the landlord, that is known as income from house property. What he has let out is deemed to be an house. So, even though the chapter heading is house property, even if it is let out for commercial purposes, still the income will be taxable only under this chapter, that is IHP, that is income from house property. Am I clear to you? Okay. However, we are speaking about exception. Rent from staff quarters and rental earnings, if it is the main business of the assessee, then it is taxable under business or profession. Rent from staff quarters and rental earning is the main business. Where will the main business apply? Where will it is on the object clause of the memorandum of association. If the object clause of the memorandum of association says that the main object is to let out, then the rental earning is taxable under PGB. Then the rental earning is taxable under PGB. Okay. Repeating, annual value of a property, we are yet to come to the term annual value, consisting of land and building together let out, and even if it is let out for commercial purposes, it is taxable only under this chapter, with an exception that rent from staff quarters, and if rental earning is the primary business, main object of the assessee, then it is taxable under business or profession. Then it is taxable under business or profession. Annual value of a property consisting of land and building opportunate thereto, of which the assessee is the owner. The next concept that we are entering is concept of ownership. Concept of ownership. The next concept we enter is concept of ownership. Okay. Concept of ownership. Ownership is determined by title deeds. That person who is the owner of the property, that person who is the owner of the property is liable to be taxed under this head. Okay. How do you know a person is owner? Ownership is determined on the basis of title deeds, document. Okay, ownership is determined on the basis of title deed. That person whose name appear in the document is regarded as the owner of the property, and tax will be or income will be computed in such person's hand. That person who is regarded as the owner. So, only the owner of the property. Ownership is determined on the basis of title deeds. That person whose name appear in the title deeds will be regarded as the owner, and the income will be computed in the hands of that person. Concept of deemed ownership. Concept of deemed ownership, section 27. Concept of deemed ownership. The word deemed means supposed to be. The word deemed means supposed to be. Concept of deemed ownership. Supposed to be the owner of the property. Concept of deemed ownership. What is this? My dear friends, at this juncture, I'm slightly forwarding your thoughts. Our tax law is framed in such a manner that up to 5 lakhs a person might not pay tax. Beyond the 10 lakhs, his tax is going to be higher. Up to 5 lakhs, he is not going to pay tax. Beyond that, he is going to pay a higher tax. 5 lakhs to 10 lakhs, only moderate tax. Suppose, let us take an example that Mr. X is having a salary income of 40,000 per month. Taxable salary, 40,000 per month. So 40,000 into 12, 4,80,000. He will not pay any tax. He also has a house which he has let out for another 40,000 per month. So what happens? 40,000 into 12, 480 salary income. 40,000 into 12, 480 house property income. Total 9,60,000. He needs to pay tax. Another example. Mr. Y has a salary income of 50,000 per month. 50,000 into 12, 6 lakhs. A very small amount will go as tax. He also has a house property which he is letting out for 50,000 per month. Another 6 lakhs. 6 plus 6, 12 lakhs. If it exceeds 10 lakhs, tax is very high. In both the cases, what they do is, Mr. X registers the house in the name of Mrs. X. Mr. X registers the house in the name of Mrs. X. Now what happened? Mr. X income 4,80,000 not taxable. According to the title deed, Mrs. X is the owner of the house. She is getting another 4,80,000 as rent, not taxable. Total 9,60,000 goes without taxation. In the example 2, Y gets the property registered in the name of Mrs. Y. What happens? Mr. Y is not taxable. to the extent, I mean, Mr. Y is moderately taxable with for 6 lakhs, very small tax. Mrs. Y also pays a very small tax for rupees 6 lakhs. Had it been totally taxed in the hands of Mr. Y, for example, if you want to understand, for 12 lakhs approximately, later you will understand all these things. For 12 lakhs, approximately 1,75,000 is the tax. If 12 lakhs is taxed in the hands of Mr. Y. By taxing it separately in the hands of X, Y and Mrs. Y, what happens is the tax will come down to approximately 70,000 in total, which means they are together saving 1 lakh. The law is not regarding this as saving. The law says it is an unfair practice, but can the law go and say, Mr. X, no, you should not register the property in the name of Mrs. X? Can the law go and say, no, I cannot say? Freedom is there. Out of love and affection, or out of some other reason, why should we worry about it? Okay? Mr. X wants to register the property in the name of Mrs. X. How can law stop it? But law tells you only one thing. Though the property is in the name of Mrs. X, Mr. X is the deemed owner of the property. Supposed to be owner of the property. Indirectly, law says, here I will disregard the name appearing in the title deed. I will look into the transaction. I will disregard the name appearing in the title deed. I look into the transaction. Who purchases, who pays for the property? Who has entered all the negotiations? So registration is not the only criteria. I ignore the registration document, look into the transaction to understand who is the real owner of the property. In law, we call it as deemed ownership, supposed to be the owner of the concern for the house property. In your company law, you would have studied a particular concept called lifting or piercing the corporate veil. There is a legal entity, but when I look into it, I remove that screen, and when I look into it, I understand that the activity taking place is not of legal entity. Similarly, though the title deed says a person as the owner, when I look into the transaction, I find some other person to be the owner. I called him as deemed, supposed to be owner. That is what is known as deemed ownership. Deemed means supposed to be. Even though the title deeds has a person's name as the owner, even though the title deeds has a person's name as the owner, but when we look into the transaction, we understand that the real owner is a different person. So such person will be treated as deemed owner. Okay, sorry. Deemed means supposed to be, even though the title needs states a person's name as the owner, but when we look into the transaction, we understand that the real owner is a different person. Such owner is the real owner. Okay. Now I am going by item by item of deemed ownership. Item by item of deemed ownership. Okay. Asset transferred to spouse without adequate consideration. Asset transferred to spouse. This is the example I gave you also. Asset registered or transferred in the name of spouse without adequate consideration. Only the transferor will be treated as the owner of the property. Okay. The transferor will be treated as deemed owner of the property. Okay. The transferor will be treated as deemed owner of the property. Asset registered in the name of Mrs. X. Even though the title deed says it is Mrs. X, Mr. X becomes the deemed owner of the property. The transferor will be treated as the deemed owner of the property. However, we are speaking about exception, where transfer is made with an agreement to live separately, then the concept will not apply. That is, the transfer is made due to divorce. Live separately means divorce. If the transfer is made due to divorce, this concept will not apply. Asset transferred to minor child without adequate consideration. Asset transferred to minor child without adequate consideration. Transferor is deemed to be the owner of the property. Transferor is regarded as the owner, deemed to be the owner of the property. Holder of impartiable estate. Holder of impartiable estate. Holder of impartiable estate. Impartiable means that which cannot be separated. Impartiable means that which cannot be separated. Right to enjoy, no right to transfer. Right to enjoy, but no right to transfer. Sanjay,
Yes, sir.
who is the owner of Mysore Palace?
The Mysore Palace.
Rajasthan Palace, Jaipur Palace.
The king with that time, sir.
That's beautiful. That's the answer. The Maharaja is the owner of that particular property. Correct, Sanjay?
Yes, sir.
Is it registered in the name of present Maharaja?
No.
It is registered in the name of
And
Maharaja.
the king paid the
The
rent.
king, exactly. So, thanks again. It is registered in the name of the throne. It is registered in the name of the throne. It is registered in the name of the crown. It is not registered in the name of the person. So what happened? Till you are Maharaja, you can enjoy the property, but you don't have the right to transfer the property. The present Maharaja of Mysore, present Maharaja of Jaipur, present Maharaja of Travancore can enjoy the property, but they don't have the right to transfer the property. Can they immediately say, boss, I will not pay any tax for this palace because only the owner has to pay. I am not the owner, boss. I am just Maharaja. See the title deed? My name is not coming. So I will not pay tax. Is that possible? The answer is no. Till you are Maharaja, you are deemed to be the owner of that particular property. People who lived some 100, 200 years back are, in my opinion, much more intellectuals than who we call today as intellectuals, or persons of high visionaries. High visionaries. So, in those days, even today, there is this provision, but I'll tell you the difference. In those days, suppose if I want to sell a property to Sitaram, what I should do is, I should sign and give. Sitaram need not sign anywhere. He is only a beneficiary, buyer. Only the seller's willful consent should be there. Buyer enjoys the benefit. Today in register office, buyer also has to sign in few places, but seller many places. But buyer in few places. In those cases, only the seller. Buyer need not sign. Only the seller need to give a willful consent and transfer the property. Buyer need not. All the properties surrounding the Madurai Meenakshi Amman temple are registered in the name of Lord Sundareswaran, are not registered in the name of anything. Every person who had a property at that time, out of their sheer devotion to God, wrote the property, sold the property to Lord Shiva itself. Because the buyer's consent need not be. They just wrote it and gave that this property belongs to the deity itself. All properties surrounding the temple are registered in the name of Lord Sundareswarar, the deity itself. And they are managed by the trust which is formed. Some of our friends from Kerala are also there. They will understand it that all the properties of the temple are created in the name of a Devasam board. You all see Lord Ayyappa temples, that Devasam. Everything there is created out of trust, and properties are registered. What happens? The person who becomes the trustee or the head of the board has the right to manage the property, does not have the right to transfer the property. The person who is coming to the seat of the trustee of the Madurai temple can just let out, can just, he cannot transfer. If today that property has to be transferred, then he has to descend. Because the property is not registered in the name of the trust. It is registered in the name of the deity itself. Look at the visionary of people that they thought registering it or transferring it to a person, that person might misuse. Give it to a body, give it to the deity. So, can the trustee or the board members come and say, boss, I will not pay the tax for these properties because I am not the owner of the property. If you want, go and collect it from him. Not possible. Till you are the trustee, till you are the head of the board, you are deemed to be the owner of that particular property. Holder of impartiable estate, which means that which cannot be separated. That which cannot be separated. Okay, impartial. Okay, holder of an impartial estate is deemed to be the owner of every property in the estate. Is deemed to be the owner of every property in the estate. Member of a cooperative society. Member of a cooperative society. What is this? Housing board. Have you seen a housing board allotment of houses to various people living in low-lying areas, slums, on these things? For them, housing board construct properties and give it to them. Housing board construct properties and give it to them, saying you need not live in this particular place. You can go and live at a house itself. The owner of the property is the housing board, the society, cooperative society. Okay, TNHP, Tamil Nadu Housing Promotional Corporation. Like that, there are various bodies which own this. And it is allotted to a person. The house is allotted to a person. He in turn lets out the property. He in turn lets out the property. The owner is housing board. But the member becomes the deemed owner of the property. Okay, the member becomes the deemed owner of the property. In this Tamil film Mudalvan, you can see a similar scene like that, where a member to whom a cooperative society allots a housing property lets it out, which they are not supposed to. But in income tax law, we are not worried about what that law is. Who earns income? The member. So he becomes the deemed owner of the property. A member to whom house has been allotted by the cooperative society becomes the deemed owner of such property. Becomes the deemed owner of such property. Partial performance of a contract. Partial performance of a contract. This comes under section 53A of Transfer of Properties Act. Okay, just for your reference, what happens? For example, my dear friends, I enter into an agreement to sell my property, house property with Divya for a total consideration of, let us take 50 lakhs. She pays me 25 lakhs and says, I will give the balance amount within 6 months, and takes physical possession of the property. Repeating, she paid partial amount and took physical possession of the property, saying balance 25 lakhs she will pay after 6 months. After that, I need to register the property in the name of Divya and give. So, in this 6 months, as per title deeds, I am the owner, but for all practical purposes, she has taken over the property. Only the remaining part is pending. So, where a person takes physical possession of the property on partial performance of a contract, where a person takes physical possession of the property on partial performance of the contract. Contract is not yet completely over. There is still some part remaining. That person, the other person who takes physical possession, okay, that person becomes the deemed owner of that property. Though as per title deeds I am the owner, the other person becomes the deemed owner, where a person takes physical possession of a property on partial performance of a contract, then such person becomes deemed owner of the property. Then such person becomes the deemed owner of the property, where a person takes physical possession on partial performance of a contract, then such person becomes the deemed owner of the property. Last, continuous right for 12 years or more. Continuous right for 12 years or more. My dear friends, many people will ask you, why is this agreement drafted for 11 years, 3 years, very conservative people 11 months? Because of this particular reason. If I enter into, let us take, I enter into an agreement with Darshit for letting out my property on a lease of 49 years, 99 years, even 15 years, more than 12 years. Though physically I am the owner of the property, Darshit becomes the deemed owner of the property. If a person gets a property on a continuous right of 12 years or more, then such person becomes the deemed owner of the property. Where a person gets right over a property for a period of 12 years or more, then such person becomes the deemed owner of the property. Such person becomes the deemed owner of the property. Read through one.
So, இயர்ஸ்க்கு மேல தான் ஓனர்.
Yeah.
சார் இப்போ லீஸ் அக்ரிமெண்ட் போட்டா 40 years, இப்போதுல இருந்தே லீஸ் அக்ரிமெண்ட் ஓனர் ஆஃப்டர் தி 12 years?
No, right from first year. Just a minute, my dear. So, friends, concept of deemed ownership. Supposed to be owner. Okay, 6 cases. Transfer of property to spouse without adequate consideration. Transfer of property to minor child without adequate consideration. Holder of an impartial estate. Member of a cooperative society. Partial performance of a contract. And continuous right of 12 years or more. On the final question my friend was asking is, if there is a continuous right for 12 years or more, at the end of the 12th year, will the person become deemed owner? No, no, no. From year 1 itself, he will become the deemed owner.
So then the rent that he pays will not be taxable.
It is taxable. It is taxable. If he collects any rent also, it is taxable.
Okay.
Sir, this
Sir,
concept of deemed ownership is only for tax purpose, right?
Yes,
sir?
yes, friend. Yes.
Okay.
Not for property
sir,
purposes. Property, the owner, real owner is the owner. Yeah, go ahead with you, my dear.
sir, 11 years contract 2 தடவை கண்டினியூஸா போட்டா சார்?
கிடையாது. அதனால தான் சொன்னேன், அந்த மாதிரி தான் போடணும். 11 years, again at the end of the 11 year, another 11 years, it will not be. Because at the beginning, I don't know it is a continuous right for 12 years.
Okay, sir.
At the safeguard பண்றதுக்காக தான் people always enter into 11 years, 3 years. Very conservative people, they don't even enter into 1 year, 11 months அந்த மாதிரி. Okay. These are all the, yeah.
Sir, like we lent out the properties for companies to lease for more than 20 years, like sir.
Yeah.
So then they won't be paying. They will be paying rent, but it won't be taxable under.
It is taxable. It is taxable. Suppose what happens? I give it to you on a lease of 99 years, some property, and whatever rent I get is taxable under, because I am the owner of the property. Now you are also deemed. You in turn let it out. நான் உனக்கு லேண்டா கொடுத்தேன், நீ அதை பில்டிங்கா கட்டி, what you in turn let it out to various people. So you are also, for you, whatever income you get is also taxable under IHB, income from house.
Okay, sir.
So this is about concept of deemed ownership, my dear friends. It's a popular theory question. Write short notes on deemed ownership. It's a popular theory question. So land and building opportunity thereto, of which the assessee is the owner, shall be taxable under this chapter. Now I come to this front term, which is the key factor term in our entire house property chapter, that is concept of annual value. Concept of annual value. Concept of annual value. Annual value is a notional value, not a realistic value all the time. It can also be a deemed or a notional value. Annual value is a notional value. 4 factors are taken into consideration for determining the annual value of a property. 4 factors are taken into consideration for determining the annual value of a property, my dear friends. 4 factors are taken into consideration. 4 factors are taken into consideration for determining the annual value of a property. Municipal value. First factor is municipal value. Value determined by local authority. Municipal value, nothing but value determined by local authority. Namala corporation tax. You are all paying house tax. Your parents will be paying house tax to the local state government. Okay, that is known as, that is computed on the property value, which is what is known as municipal value, which is determined by local authority. Fair rental value, FRV. Fair rental value. Rent of similar property in the same locality. Rent of similar property, a same type of property in the same locality. Rent of similar property in the same locality. Fair rental value. Standard rent. Rent determined under rent control law. Rent determined under rent control law. Okay, the rent determined under Rent Control Act is known as standard rent. This act is applicable only to the state of Delhi. Okay, actually it's a useless act. I don't know why that state government alone holding this. Otherwise, it will be a uniform law across. This one standard rent comes and makes the structure little complicated. Okay, and it is only for Delhi. Actual rent received or receivable. Actual rent received or receivable. Actual rent received or receivable. The actual rent for which the property has been let out. The actual rent for which the property has been let out. Four factors are taken into consideration for determining the AV, annual value of a property. MV, FRV, SR, AR. Municipal value, fair rental value, standard rent, actual rent. Municipal value, fair rental value, standard rent, actual rent. Four factors are taken into consideration for determining the annual value of the property. MV, FRV, SR, AR. Basis of determination. I hope that though there will be a small lag, but the video is also visible to you. Okay, okay, friends. In your notebook, I want to first diagrammatically represent this and then go for the theoretical explanation of it. Okay, so if it is better if you can look into the screen and you can understand it better. My dear friends, please write all the four things in a serial order. One line you need to leave. MV, leave one line. FRV, leave one line. SR, leave one line. AR. MV, FRV, SR, AR. Okay, it's just a theoretical explanation, my dear. I mean, just a diagrammatical explanation. Theoretical explanation will follow. Okay, because it will catch your eyes immediately if you draw it as a diagram. So you have written MV, FRV, SR, AR. First, compare MV and FRV and determine whichever is higher. Put a flower bracket for MV and FRV, determine whichever is higher. Put a flower bracket for MV and FRV and the up arrow indicates that whichever is higher. So when we are going to look at it theoretically, I am going to say compare MV and FRV and determine whichever is higher. That is the step one. Okay, you have written MV, FRV, whichever is higher. After that, my dear friends, you have put an arrow, whichever is higher. From there, cover SR, standard rent, whichever is lower. That is, answer of step 1 will be compared with standard rent and determine whichever is lower. Answer of step 1 will be compared with SR and determine whichever is lower. So repeating, step 1 I would have compared these things, whichever is higher. That answer with SR and determine whichever is lower. and that answer with SR, a flower bracket from that arrow to SR, and then a lower end arrow, which means that whichever is less. Step 3, my dear friends. Step 3, that answer with AR, whichever is higher. Step 3 is from that arrow to AR, whichever is higher. Step 3 is that answer into AR, whichever is higher. Whichever is higher, top bracket or upgoing arrow you would have put, round that arrow and write is equal to gross annual value, is equal to gross annual value. I hope my explanation is clear. MV, FRV, whichever is higher, FRV, SR, whichever is lower, SR, AR, whichever is higher, and that answer is known as is equal to gross annual value. Gross annual value. Quickly, if you think that you have understood my explanation and did the drawing, quickly one of you can send me a pic so that I will put it in the group for our friends to understand. Or if you send a pic, I will definitely say, one of you please. If you send a pic also, I will be able to tell you whether you have understood. But once I see the pic, if that is fine, I will immediately put it in the group so that other friends can capture it. Yeah, okay, thanks. Thanks. I got it. Thanks, Bharati. Thanks, Darshan. I got it. Thanks, Ratan. Okay. I have put it in the group also. That is how the diagram works. Okay. So determination of annual value will have 3 steps. Determination of annual value will have 3 steps, my dear friends. I am writing it theoretically. Step 1, compare MV and FRV, determine whichever is higher. Step 2, compare answer of step 1 with SR and determine whichever is lower. Step 3, compare answer of step 2 with AR and determine whichever is higher. Okay, whichever is higher. Okay. The answer of step 3 is known as, gross annual value, GAV. The answer of step 3 is known as gross annual value. Okay, net annual value is equal to GAV, that is gross annual value minus, okay, gross annual value minus municipal tax, okay, gross annual value minus municipal tax paid. I want that paid to be highlighted. Net annual value is equal to GAV minus MT paid, municipal taxes paid. Municipal taxes paid. The word paid has a significance. Only if municipal taxes are paid, deduction will be provided. Only if municipal taxes, my dear friends, only if municipal taxes are paid, deduction will be provided. Okay, deduction will be provided. Where it is due but not paid, deduction will not be provided. Where it is due but not paid, I will not give you any deduction. Where empty, municipal taxes are due but not paid, deduction will not be provided. Where past years are accumulated and paid now, please understand, last 3 years I have not paid. So last 3 years I cannot claim deduction. Only if it is paid, deduction will be allowed. Only if it is paid, deduction will be allowed. Last few years I have not paid. Okay, I have not paid. Where past years, in those years I would not have given deduction because it is not paid. Where past years are accumulated and paid now, then the whole amount paid can be claimed as deduction. However, exception, MT paid in advance, municipal taxes paid in advance will not be eligible for deduction. However, if you pay it in advance, go to respective years in the future and take the deduction. Okay? MT paid in advance will not get the deduction. Where MT municipal taxes are paid by tenant, then also deduction will not be provided. It means it is not paid by you, then also deduction will not be provided. Very patiently read through the theory. I will explain once more. you the photo. Somebody has told me that, sir, you have not sent the photo. Sorry, checked it and left it as. Sorry, Naman, thank you. I have not sent it. So again, I go to our holistic explanation. I go to now our holistic explanation, friends. What is how to determine the annual value? That is what section 23 is all about. How to determine annual value for salary. Salary is straightforward, whatever you earn. But house property is a notional value. Okay, so there are 4 factors determining MV, FRV, SR, AR. Step 1, MV and FRV, whichever is higher. Step 2, that answer with SR, whichever is less. Step 3, that answer with AR, whichever is higher, will become gross annual value. I want the class to understand one more thing. Suppose if the property is not in Delhi, or in other words, suppose SR is not given, then the step 2 will not come. It becomes all the more easy. MV, FRV, AR, whichever is higher. You know, step 1 is also higher, step 3 is also higher. There is no step 2. There is no step 2. Please understand, if SR is not given, that's why I said this is a law which needs to go away. If SR is not given, standard rent is not given, then in the diagram, if you close the second step and see, if you just place your hand on the second step and see, first step also whichever is higher, third step also whichever is higher, that means whichever is higher is going to stand. That means whichever is higher is going to stand. So, yes or not given, the question becomes all the more easy. Okay, whichever is higher becomes the gross annual value. SR given 3 steps. Once GAV is determined, then we go for NAV is equal to GAV minus MT paid. Only if it is paid, deduction is allowed. Past years accumulated and paid, now claim full deduction. However, if MT is paid in advance or MT is paid by tenant, no deduction will be provided. Any doubt? Take your practical notebook, write the chapter heading, income from house property. Take your practical notebook, in a fresh page, write the chapter heading, income from house property. I am in page number 73 of your material. I am in page number 73 of the material. Sri Parashuram is the owner of 6 houses in Delhi. The details are MV, FRV, SR, AR. Municipal taxes 10% of municipal value. Note, for house property 1 and 2, empty is due but not paid. 3 and 4, 50% of the due is paid. For fifth, of the municipal taxes of the last year and current year. Municipal taxes of the last year and current year is paid. For sixth, municipal taxes of the current year and 2 years advance is paid. Compute NAV. Read through. Computation of net annual value. Computation of net annual value. All of us in the classroom, please have particulars house 1 to 6, H1, H2, H3, H4, H5, H6. Need columns. I will do it in 2 different parts. Okay, I will do it in the Excel in 2 different parts, but you can write it in a singular. Use the margin space also. Particulars is a slightly lengthier column. Otherwise, we are only going to write numbers H1, H2, H3. Sienna, can you unmute yourself? Okay. Shilpa, can you unmute yourself? Shyam?
Yes, sir.
Yeah. Shyam? Let's go to property 1, Shyam. Let us go
Yes,
to property 1. Okay, share analysis. Friends, please listen. Let's go to property 1, Shyam. Step 1. What is step 1, Shyam?
Compare MV and FRV, determine whichever is higher.
So, which is higher?
FRV.
Yeah, how much?
24,000.
Yeah. What is step 2?
Compare FRV here, 24,000 with standard rent and whichever is lower.
So, what is the answer?
Standard rent, 17,000.
What is step 3?
Compare step 2 with actual rent, whichever is higher.
So,
answer is 18,000 actual rent.
That becomes the
gross annual value.
So friends, thanks Sasha. So friends, first step is to determine, okay, you need not have a step by step. You can directly see the question and determine gross annual value. How do I determine that gross annual value? Step 1, as our friend said, 20 and 24, whichever is higher. So 24. Okay, so 24. 24 and 17, whichever is lower. So 17. 17 and 18, whichever is higher. So my gross annual value is 18,000. Gross annual value is 18,000 less municipal taxes paid. Evlo Sham? What is the municipal taxes paid for house 1?
10% of 20,000, 2,000, sir.
2,000. Anybody has a different answer?
Sir, it is only due,
Tax
not
not
paid.
paid.
It is due. Look at Bharati's explanation, Sham. It is due but not paid. So our theory, we have clearly written municipal taxes will be allowed only if it is paid. So it is due but not paid. So what should I take, Sham?
Sir, if it is not paid, deduction will not be
Will
provided,
not
right?
be coming. So nil. So our net annual value will be 18,000 because municipal taxes are not paid. Our net annual value will be 18,000. 18,000. Go ahead, do for the other properties. Go ahead, do for the other properties, please. Once you are through, you can give me the answer, Shyam. What's the answer?
Sir,
Yeah, go ahead.
sir, internal value H1 18,000,
Okay,
H2 36,000,
okay,
H3 46,200,
okay,
H4 33,900,
okay,
H5 44,400,
okay.
H6 43,500.
That's the answers I'm also getting. That's the answers I'm also getting, my dear friends. Yeah, Shilpa, I understand that you are unable to mute. Don't worry. Okay, we'll solve that issue. I want to just check. We'll solve that issue today. Don't worry. That's the answer I'm also getting, my dear friends. Any doubts? Ask me.
Sir, how did you get 1800 in H3, sir?
H3, 1800 away got it.
Yes, sir.
Because municipal value of the property is 36,000. Municipal taxes is 10% of 36,000, 3,600, of which only 50% is paid. 36,000 into 10% into 50%. That's how I got this 1,800.
Okay.
Sir, will municipal
One by one.
How did you
change
get
So first, Bharati, please wait. Raja, ask me the doubt.
Sir, we assumed municipal value of last year to be same as current year, sir.
Yeah, yes, Raja. Majority of the time, 10 years once da Raja, they will change the value.
Okay.
Yeah. Bharati, what's your doubt?
Sir, Jagriti, how
Sorry,
did
Jagrati.
you get H5?
H5. H5 is, you got 54,000, Jagrati? Or you are stuck?
Yes, sir. Yes, sir.
You got
Empty
54.
paid. Yeah.
Yeah. And empty paid is 48,000 is the municipal value into 10% into 2 years. Last year and current year is paid.
Okay, sir.
Okay. Do the next question also, friends. The next question. Read it and do it. Remember, if SR is not given, it is not zero. Step 2 is not applicable because SR is only for a particular state. So please do. SR is not given, the answer becomes all the more simple. The question is continued in the subsequent page. Please try it out. Agastya, I will take your answer after you complete. Take your time. After you complete, give me the answer. Are you through with the answers? Ashwin, if you have the answers also, you can let me know.
Yes, sir.
Go ahead.
For house one, 1,50,000 NAV.
Okay.
House two, 71,400.
Okay.
68,000.
How much?
68,000 house.
Paka. That's the answers, friend. Agastya, I think you deducted all the entire amount as your answer. No, that is not correct. Whatever a friend said was the answer, my dear friends. Whatever our friend was saying, Ashwin was saying, that is the answer. 150, 71, 400 and 68,000. Probably, Agastya, I was just telling that the mistake you did is probably you have taken it for the entire 10 months or 9 months. No, if it is paid in advance, you should not take. Only of the past period, you should take it. Otherwise, this is how the answer goes. Back to your theory notebook. Back to your theory notebook, my dear friends. Special cases in computing annual value. Special cases in computing annual value. Special cases in computing annual value. Case 1. In case of vacancy. Case 1. In case of vacancy. This is, you let out the house property, my dear friends. You are letting out the house property on rent and it has remained vacant for a particular period of time. You have let out the house property on rent and unfortunately the property has remained vacant for a particular period of time. In that case, how to compute? Where a property has been let out but remains vacant for part or whole of the year, the mode of computing annual value is as follows. The mode of computing annual value is as follows. Where a property has been let out but remains vacant for part or whole of the year, the mode of computing the annual value is as follows. My dear friends, MV, FRV, SR, AR, and we know the computation technique, it holds good. Step 1, whichever is higher. Step 2, whichever is lower. Step 3, whichever is higher. And for this purpose, take actual rent for 12 months. For that computation purpose, take actual rent for 12 months and compute. The difference is you will go for these 3 computation steps as it is, and you will take actual rent for 12 months and compute it. The difference is the answer of step 3 is not GAV. I incorporate a new term called expected rental value. The answer of step 3 is ERV, expected rental value. That is, had I let it out for 12 months, how much I would have got? Adudha. That is expected rental value. Okay. Okay. The mode of computation is as follows. The 3 steps, write it as it is, mentioned above will be followed. The 3 steps mentioned above will be followed, and the answer of step 3 will be known as expected rental value, ERV. And the answer of step 3 is known as expected rental value. Remember, for computing this, I will take 12 months actual rent. I will take 12 months actual rent for computing this. For computing the ERV, I will take the actual rent for 12 months, not lesser. Okay. So, I will take the actual rent of 12 months, go for step 1, step 2, step 3 and compute the answer, and the answer will be known as expected rental value, ERV. GAV is equal to ERV, expected rental value, minus vacancy allowance, which is nothing but rent per month into number of months of vacancy. Rent per month into number of months of vacancy. Gross annual value is equal to expected rental value minus each month rent 9,000. 3 months it has been vacant. 9,000 into 3, 27,000. And we know NAV is equal to GAV minus empty pay. I am repeating it. In case of vacancy, what happens? Nothing happens up to step 3. I take actual rent for 12 months, compute step 1, step 2, step 3. I need just one extra step, that's all. The answer of step 3 is known as ERV, expected rental value. Had I let it out for 12 months, this is what is expected. Yes. Vacancy allowance, rent per month into number of months of vacancy. And my final answer will be, and my answer will be GAV. NAV is GAV minus MT.